Hello, this is Dale, and this is my nightly video blog for Tuesday, April 19th. Well, we're just going to hold our positions as the market was up a little bit, then it was down a little bit, and it finished just about even. A little bit to the bull side, but it actually finished in what is referred to as a doji, and I'm going to show you that on the chart. So we're just going to hold everything. We're going to hold our bear call on the RUT. We're going to hold our puts on John Deere, on AT&T, on PG, Procter & Gamble, and our call on Gilead Science. And everything else we're just going to hold. Okay. We're in the meat of earnings season. Most of our financially strong stocks will have earnings within the next 2 weeks, so I won't be putting on any new positions until then, and I'll be exiting a lot of positions as they get close to earnings. So we never want to have a position, especially if it's a strong position, going into earnings, because it's basically like you're going into the casino and putting everything on either red or black, and that's not the way we want to trade. So we don't have any actions for tomorrow. We're just going to hold all our positions. Remember that this is not a recommendation to buy or sell. Options Infinity LLC is not a registered investment advisor or a licensed broker. The information and videos found on this site are for educational purposes only. Well, the first thing we want to look at is the RUT, and we have a bear call on the RUT, and I'm looking for a little bit of pullback on the RUT, similar to what it had here. You know, this went up and dropped back, went up, dropped back, went up, dropped back. And I'm looking for, and the ribbon was strong, but then we had to pull back, ribbon strong, pull back, ribbon strong, and I'm looking for a pullback. And I'm especially looking at that pullback because of what I see on the candles. Excuse me for just a second. It is that time of year for allergies. This is what is referred to as a doji. It's a very common candlestick formation where basically this starts out in the morning at 11:40. It went up during the day, then it went down during the day, and it finished the day right at 11:40. So there was no change during the day. Now, I'd like to quote from the book written by Stephen Neeson, and Stephen Neeson was the first to reveal the startling power of candle charts to the West. He is known as the Western world's leading authority on the subject. He was actually a broker in Japan, and they shared with him the power of candlesticks, and he's the one that brought it back over to the West and has showed us also the power. And let me quote right from his book. The book is an excellent book. If you haven't gotten it and read it, it's excellent complement to the rest of your library. It's called The Japanese Candlestick Charting Techniques. And in the book, he calls the doji, he says dojis are valued for their ability to call tops. This is especially true after a long candle in the uptrend. Okay? The reason for a doji's potential negative implication in uptrends is because a doji represents indecision. Indecision, uncertainty, or vacillation of buyers will not maintain a rally. It takes the conviction of buyers to sustain a rally. If the market has had an extended rally, and it has, and or is overbought, and it is, then a doji surfaces. When a doji surfaces, it could mean the scaffolding of buyer support will give way. And that's exactly what we have here. You'll see that we had one of those earlier back here. We had one right here. Wasn't as clear cut as this doji. This is about as clear cut a doji as you can get. You see this one back here. It took another couple days for it to finally give way. Okay, this is not an exact science. It's just an indication that things might be changing. I'm going to take that as an indication that I should stay in with my bear call. I'm looking for the RUT to drop, and not drop considerably, but I don't need it to drop considerably. If I look at the Analyze tab, here's where here's the break-even point. Here's where we are now, and this is the point where we would only be down about 6%, and then here's the gaining point, and we're looking for a very smooth move, not a great move. We don't need a great move down for us to be right in the money. And you can see a move like this. Let's call it 1120 down to 1190. That's a 30-point move. That's a substantial move down in the RUT. If we get that, we're going to be in the money. And at that point in time, I think I'm going to get out, because I'm not really looking for this to be a substantial drop, and I wouldn't be a bit surprised that we get a little correction, and then that might push a little bit higher. Okay, so if we get that substantial drop, I'm going to go ahead and exit our RUT, and we'll talk about that every night as we get into there. But for right now, I'm holding a bearish stance because of this doji, and because we've had an extended run. Next thing I want to talk about tonight is the fact that we are right in the heart of earnings season. If we look down our financially strong, you can see that Apple, Amgen, Clorox, Danaher, Disney, Gilead, Home Depot, Coca-Cola, McDonald's, Microsoft, Nike already had their earnings. PepsiCo, Procter & Gamble, PPG, and Starbucks, AT&T, and Verizon all have their earnings in the next 2 weeks. So what I'm going to be focusing on is getting out of existing trades and waiting for the earnings seasons to be through to add any new trades. And the last thing we want to look at tonight is our ETFs, because we want to definitely talk about trading the weeklies. You can see that as far as the SPY is concerned, it came up today and dropped down, pulled back, and made a measured move right here. And I'm looking for it to drop somewhere around here. And then, but if it does increase beyond the 2010, I think the bullish move is still going on. So that's what I'm looking for. If it pushes up in here, we're still following the bull. And if it goes down here, we might be looking for a little bit of a pullback. Still remaining neutral until the market reacts to what we've got going on right here. But if it does come down and make a measured move here, you might consider a put in the SPY. TLT, it has come down to the -1 on the regression channel, pushed up, pulled back. If it makes a measured move here to the upside, you might consider a call, a weekly call. Remember, about 10 days out, at the money, weekly call on TLT. And that's my blog for tonight. Come on back tomorrow night. Bye-bye now.